Good morning, everyone, and welcome to today's Frontier Opening Bell. I am Bosin Namofai here on Frontier Africa Reports. Let's go straight and introduce my panelists for today on the show. Ali Khan Sachu, the CEO and founder at Reach Frontiers Management from Nairobi in Kenya. Thank you very much for coming through this morning, Ali, from the East Coast. On the West Coast, I have Ayode Jiebo, who is the CEO and a trader at Afrinvest Securities here in Lagos. Ayodeji, good morning.
Good morning.
Thank you so much. Uchenna Minis is an FX trader and managing partner at Blue FX Nigeria. Uchenna, good morning. Welcome to the program.
Good morning. Thank you for having me, Bosin.
And we appreciate you as well. Luke Ofojebe, who is the team lead equity research at Vertiva Capital. Thank you, gentlemen. Hope you had a very nice night. So let's get the new trading day started. The big story around OPEC, the big story around the OPEC cutback and all of that. But quickly, let's take a very quick snapshot of some of the major African equities market closing on Wednesday. Global markets start to recede, but African markets managed to finish in the green, with the exception of the Ivory Coast, the BRVM down about 0.5%. The composite, that's the composite figure, 136.09, but the BRVM at 10 took a bit of a bigger dip, more than 1%. Nigerian market finished about 0.1%. The Egyptian market finished in the green, almost 1%. The Kenyan market was up about 0.5%. And South Africa was the most solid among the markets in SSA on Wednesday, up a major 2.19%. Ali will touch on that for us a bit. So let's just go straight to Ali in Nairobi. Ali, bring us the big stories here from the East Coast. I'm sure the bank merger approved by the Bank of Uganda is in the news, but what else is making a big splash on the East Coast?
So let me first start very briefly with the South African market, which you referred to. I mean, if you want a definition of a V-shaped recovery, that South African all share really has rebounded has had a violent rebound. It's been a really impressive turnaround. At one point, it was even up 3% yesterday. And I think, as I said before, that is a function of the correlation between Johannesburg and New York, where we've had another very, very strong close yesterday. So I think we've got to look at Johannesburg a little bit separately, but it's been a very meaningful rebound, and the Rand also has bounced from levels above 19 to just around the 17 level last. Here in East Africa, if I can start off with the first headline news out of Business Daily by some, which was about Eurobond owners essentially forcing Kenya away from G20 debt relief. And this story is about why Kenya turned down the opportunity to request for debt relief, something that Angola is doing right now and looks like it's going to get it. And the reason was in the detail of the loan agreements and Eurobond documents. Essentially, the Eurobond holders could have triggered a default and basically would have meant a very, very expensive situation for the government of Kenya. So I think that's worth noting around why the government of Kenya has not requested a moratorium or debt relief. This is the reasoning behind that. You're referencing this merger announcement in Uganda, which I've only seen from one Twitter handle, but I'm sure it's this, I think, speaks to us on what we're going to see across East Africa and Southern Africa, which is more banking consolidation. Regulators are keen for banks to be better capitalized and for that trend of consolidation to develop. And I think this is a signal in the noise. We're going to see a lot more of this across even East, West, South Africa. You've already had it under Sanusi. We never had it here to the same degree. And I think now you're getting a market-driven push to see more bank consolidation.
Very, very interesting. If you have a minute later on, on the show, Ali, if there are any announcements from the East Coast, East African markets, Total, for example, doing a virtual AGM, so a number of folks, a number of dividend payments. It looks like almost all the annual meetings for this year will be on Zoom. Zoom itself has gone $50 billion in market cap, much bigger than the Nigerian stock market. So that's a big story. But let's check in with Uche and what's going on with the currency market and the OPEC. Now, dollars seem to be making a very some good comeback, just as oil prices are receding because of the story between OPEC alliance. So this is Nigeria getting caught in the middle. The National Assembly raised oil price benchmark for the country to $28 a barrel from 25 submitted by the executive. Uche, coming on this conversation here.
You mentioned and said Nigeria was caught in the middle. I wouldn't say Nigeria was caught in the middle. I think it was a deliberate act. OPEC, Saudi Arabia, and Russia sort of agreed to extend their production cut by an extra month, but on the condition that the laggards, which include Nigeria, Iraq, and Kazakhstan, would overcompensate for not meeting their compliance cut for this past month in May, and that is the extension of the production cut would go into June and also go into July. But I think where we are now, as the country, we really cannot afford to continue to sustainably keep up with the production cut, and that's where we are. It's really going to be telling into our bottom line in terms of the revenue generated to match up with the budget we set on. There is that positive outlook in terms of demand as economies are starting to reopen, so we're seeing strong demand, and that has sort of pushed oil into that bullish sentiment and that upward trend. But it's still bleak. There's still that caution in terms of what exactly would be happening going forward. So there is that downside risk that's sort of accumulating, and people are sort of uncertain as regards to the possibility of a second wave of the pandemic virus, and also maybe economies might go back into a fresh lockdown. South Korea is starting to see some increase in infection cases again, so sort of validating the possibility that there might be a second wave. So I think that's where we are. I think that's where we have to just keep our fingers crossed and see what next lies ahead.
Great. So I'm just going to go straight to Ayode Jiebo, the trader and CEO at Afrinvest Securities, and ask him a straight question. Is the Nigerian insurance sector recapitalization and consolidation program jinxed by what we already know from the regulator setting another deadline forward from December this year to September 2021?
Okay.
Will this capitalization ever happen?
I think it has to happen. We may just be kicking the can down the road, but the sector needs a recapitalization. We need, which would lead to a lot of mergers and acquisition within that space. While we would say this current shift looks very valid due to the COVID-19 pandemic, but because of the several shifts that have come before, so now it's looking like we feel that the players within that market look stronger than the regulators, so they are able to persuade them to have a shift in the deadline for the recapitalization. If you look at what happens within the banking space, once a deadline is given, everyone works towards that. We saw that in 2005, and that has really changed the landscape within the banking sector. We think we need that major boost so that the small fringe players can try to find partners, and they will be able to take on more larger transactions. They will be able to take on larger transactions. We can see for some of them that are not even listed, we can see the initiative, the Leadway Insurance supporting a lot of the crowdfunding initiative within the agri space, and that has begun to change that particular space, because we know beyond the issue of the yield to yield challenges that we're going through within the agri sector, funding is also a major factor or a major constraint within that particular space. So for me, I believe that this recapitalization has to happen, and all eyes will be on NICOM not to shift again before we get to September 2021. Now NICOM has a very valid excuse that can be tied to COVID-19, but that sector needs to recapitalize, which would also be supported with policies. So we know the group life insurance, compulsory group life insurance policy, and also the awareness that they also need to create would be a major boost within that space.
Okay. Thank you, Ayodeji Ebo. Let me ask Luke at Vertiva. What's the take at Vertiva Capital? How do you think the market or investors should play this extension of insurance sector consolidation in Nigeria moving forward? And if you just add that to, add the debt market, fixed income, state of that market for us as it opens today's trading day.
So, like Ayodeji mentioned today, given what the latest trend we've seen in the insurance sector about this new regulation asking insurance firms to recapitalize. So I do think that going forward, we might see some mergers and acquisitions, like Ayodele rightly said. But however, given the fact that we are in research, so there is a bit of Chinese war between research and investment banking. So I can't really tell you specifically these are the companies to watch out for in terms of mergers and acquisitions. However, that's what we expect. So in terms of investing in some of these insurance stocks, I would rather say that investors should be cautious, because clearly there might be winners and at the same time there will be losers. So it's actually a terrain that investors need to be very cautious of. In the meantime, then in terms of our overall expectation for the equity markets this week, like I said at the start of this week, we expect the bullish trading to persist for the rest of the week. And the reason is because a number of stocks are still trading at very attractive prices. Another macroeconomic indicator to watch out for is the oil price movement, which is really correlated with our equity market here in Nigeria. And we've been seeing like consistent upward movements in the oil markets, and that's also supporting trading sentiment here in Nigeria. So on that basis, I think we might just continue to see that bullish trend. However, we still do not rule out the fact that some traders, investors might just want to take advantage of short-term gains, like we saw yesterday. For instance, banking, consumer, and industrial goods sectors actually closed down yesterday. Not because we saw massive sell-offs, it's just because investors decided to take profit on some of these counters that I've seen rally within the last couple of trading sessions.
Okay,
so that's
great. So let me ask Ayodeji back very quickly. Ayodeji, where are we with the Eurobond market?
Yes, we saw some form of sell-off within profit-taking in the Eurobonds market yesterday. We saw for most of the Eurobonds, especially looking at the Nigerian space, we still see that they're still very attractive, though for some of them are trading at a premium. We saw the 2023 bond, Eurobond, that's the sovereign Eurobond, shed some weight yesterday. But we feel that there will continue to be interest as long as we continue to see. You can look at the pressure within the within the FX market. So for the domestic investors that also have they have FX obligations, a lot of them are trying to hedge, and Eurobond beyond the dollar mutual funds. For the institutional guys, they are also able to hedge with Eurobond. So we continue to see interest within that space, and we know for the Nigerian government, I've seen that it's a no-go area in terms of raising funds from the foreign market, and they've tailored it now or focused now on raising the capital locally. So we feel that there will still continue to be interest. But what one thing to also sound out is that we are sending a negative signal to the foreign portfolio investors by continuing to keep them in out of their will by delaying. Yes, there's been assurance from the CBN, but like what we're experiencing now for the foreign direct investment, we may begin once they are forced out, because it was based on the assurance of the CBN, the setup of the I&E window in 2016 that led to that high influx of foreign portfolio investors. But I fear now that once they escape, eventually when CBN supplies them, they will be very reluctant to come back, and whatever assurance that we try to give will be taken with a pinch of salt. So we need to focus on that.
Yes, that's very interesting. The authorities need to keep that at the back of their mind. Quickly about the Southern African market. Ali, back to you very quickly. Earnings coming through across various jurisdictions. I checked with the Zambia Stock Exchange. I checked with other markets. Earnings, including Euro markets in Nairobi. It looks like earnings announcement and annual shareholders meeting remain in very big focus. What's your take on this?
So just to quickly touch on what you were asking about, we've got a series of shareholder AGMs going on. They're all going on across Zoom. Kenya Commercial Bank, the biggest bank, is having its AGM on Zoom today. We've got a bunch of dividend payouts which are being announced or paid in the next few days. One of them is Total. Total here runs a lot of petrol stations, so that's that Total business, not the exploration side, which of course has a big position in East Africa. But if I can just root back to the point that was being made about how foreign investors are trapped in the Nigerian market, and touch on the Eurobonds, Zambia, of course, has hired Lazard Brothers to restructure its balance sheet. This is the big story, and those Eurobonds, of course, were the first African Eurobonds to start trading at distressed levels. Zambia's got less than $1 billion of foreign reserves. The foreign exchange rate has totally collapsed, and you have a kind of canary in the coal mine situation there. You can see, if you don't get it right, where it does end up, and it ends up just where Lusaka is today. And I think as sub-Saharan African investors, we've got to keep an eye on that, because that's when faith is entirely lost. The bigger problem with Zambia, frankly, seems to be that a lot of loans were taken out at ministry level with sovereign guarantees and are not being reflected in the balance sheet, even to the point the Zambian authorities can't come up with the actual number. So that's even more concerning as well. So just to finish off with that Zambian point, it's an example of what happens when you have a debacle.
Very interesting. Okay, so let's wrap it up. North Africa, very briefly. Let me just ask, are the North African markets to the conversation? Nothing much there, but if you look at Egypt, of course, the biggest market and scratching and holding the headline, the PMI for the month of May increased to 40.7 from 29.7. We spoke about Egyptian markets and the economy. Ali spoke extensively on that on Tuesday here on the show about how Egypt was able to bite the bullet and that you can ask the PMI leading coming through. Please go ahead, Uchenna.
Your question? I think you were off for a bit.
Yes. So I guess that was a glitch there. But go ahead. We need to wrap up. Yes.
I didn't hear what you said. No, I didn't hear nothing from you.
The question was to wrap up on the part of crude oil. I said was that oil price is still at this very low level, but Egypt just announced the discovery of new oil fields. So it looks like whatever the price of oil, whatever the cutback, it looks like as soon as everyone finds oil in his backyard, everybody wants to exploit it, no matter what the price or the demand supply metrics is at whatever point.
I think Egypt finding oil at this point is really not good for the global, should I say, supply level at the moment. I think we can just say, unfortunately, it's sort of a wrong timing. Anyways, I think a lot of focus will be on the meeting today with OPEC and OPEC Plus as regards to what they intend to do in the next 1 to 3 months. They have said that they would not be overly reactive by having longer term plans, or rather have short term plans. As the risks continue to be more, more definitive. We're also looking at the possibility that Saudi Arabia has hinted with UAE and Kuwait that the voluntary oil production cut that they embarked on just to help to bolster demand into the market, they would rather just discontinue it at this month. So in a way, we should be expecting some sort of supply into the market getting into June, July, and I feel we might start to see a fresh downside pressure in oil in the near term if that case remains.
Okay. Thank you so much, Uchenna Minis. Let's round it off today and see everyone back tomorrow, Friday, on the show Frontier Opening Bell. It's going to be the first Friday in the month of June, so we have a lot to pack into what has happened so far this week. Thank you very much, Uchenna Minis from BlueFX Nigeria, Ayodeji Ebo from Afrinvest Securities. Thank you very much. From the East Coast, thank you so much from Nairobi, Ali Khan Sachu, the CEO and founder, Rich Frontiers Management. Thank you very much for weighing in on Eastern and the Southern African markets. And of course, Luke Ofujebe, who is the team lead, equity research at Vetiva Capital Management here in Lagos. Thank you very much, everyone. Do have a great day, and I'll see you again tomorrow, same time. Bye for now.